So this is the pound dollar analysis for Wednesday the 18th of October. Now, what's happened in this market on the 17th? Well, I did outline the moving average here in black, sloping downwards and proving to be resistance, along with coupled with the 3304 level being a confluence. Now, prices did come down to the below the 3281, which was a major level already marked out on the charts, and prices retested it from underneath, and it was not held, as can be seen by the large wick on this candle. Prices traded above the 3281 and actually tested the moving average, the higher time for moving average here marked out in black, and subsequently sold off. So again, we had several touches of this moving average, with price not being able to successfully break and navigate above it. As can be seen by we just had one close actually above it, and it was immediately sold back off. And the other times it has just mainly been wicks that's been testing this this large moving average here in black, and we've had a sell-off essentially in the pound against dollar. We had Mark Carney out earlier today. He did have I think it was a news conference, or he's testifying in front of Parliament. While he was speaking, and according to the market commentators, he was somewhat hawkish, but regardless, we have seen some selling in the pound in and around these technical these technical reference points, these higher moving average here in black. So we've come all the way down. We have not really reacted to the 200 period moving average. We've sold through that, and we've come all the way down to 3160. So it's about well, how low did we actually go? Actually, let's just have a look. We went all the way down to 13, and let's just say 3155. Ideally, I was looking for prices to go and test the 3147, so we're about 8 pips off that level. And let's just look where we think markets are going to go going forward. So I'll have a look at the high time frames first before coming back down. The high time frame should be pretty short. On the high time frames, we did appear to be heading up, to be in an uptrend on the monthly chart, and I'd say an uptrend in the sense that we are seeing some recovery from in and around the sell-off from Brexit. Of concern is the fact that last month, near the end, we did see some selling of the pound after a strong bullish move to the upside, and the selling has continued into October. We do see currently in October, we do have a bearish candle forming on the monthly chart, and we have traded quite a bit into the range of the previous month, which is not a positive sign. But overall, we still do appear bearish on the monthly chart. On the weekly chart, and let's just see again, we do have a series of higher lows, particularly in and around. We found support at the 20 period moving average on the weekly time frame. Now, last week we did have a bullish move after the 20 period was tested. So far this week, we have not seen a follow through. We've not seen a continuation to the upside, and currently we are near the week's lows at the moment. Now that is it's a bit of concern, as I was expecting a strong continuation, possibly to go up to test the 3650 level. Now, if we do break down, we'll be looking at the levels beneath. We'll be looking at 20 period moving average, all of which would be, let's see where 20 period moving average is currently. 20 period moving average is currently sitting at 3050. Yeah, it's around 3050. The let's just get it right. 3065. 3065. That's where 20 period moving average is sitting at on the weekly chart. So the move from last week could have just been an impulsive move after the exhaustive sell-off down to the dynamic support. So if we go down to the daily chart, let's make this, let's see. On the daily chart, what can we see here? We've had a sell-off from 36.57. We found support at this moving average here outlined in black. We've bounced to an area, almost up to this area of resistance, in and around the, where is that, 33.50 level. And we have seen a bit of a sell-off on the daily chart. Now, it is the signs of what was first indicated on the 12th, where we did have a strong, but it was a recovery, which would have probably shaken the bull, such a strong sell-off. We did recover to close bullish, but on the come up to the 20-period moving average and sold off a bit from there as well. Since then, we've had 2 consecutive bearish days. The candles on the bearish days have been larger in terms of their bodies and their closes being near their lows, which indicate bearishness on the daily chart. So let's just have a look at our execution time frame. So on the execution time frame, we did mention the 33.50 all the way up there, and yep, we would be looking for prices. We will see how prices react to this 200-period moving average, whether there is a reaction at all. We do have the 20-period coming down as well. We also have the 50s. All pretty much the faster moving averages are starting to point downwards. So we do seem to have a bit of recovery at the moment. But the strength of the recovery is not similar to what we saw over here, which was a pretty much a reversal over here on the 12th. Instead, we are seeing these smaller candles to the upside. So we'd need to see a candle of a pretty decent size to the upside, a bullish candle for me to believe there is a shift of momentum and there is a bullish reversal of the primary trend to the downside on the execution time frame, the hourly. So if we continue to get smaller candles, I'd still maintain my bearish bias, expecting prices to go down and have a true test of the 31.47 level. If we do break 31.47 without much reaction, 30.93 would come into focus. That was a weekly pivot from a couple weeks now. We may not get much of a reaction as it is a weekly pivot, but below that we've got the 20-period moving average on the weekly time frame sitting at 30.65, and below that we've got the big round number of 130. Some sizable candles to the upside, and this is the case, and this is in fact a higher low, slightly above support. Then the obvious levels we'd be targeting would be 32.81 to see if we do go up there and stall again in prices, possibly providing a double top like over here, where we had a sell-off at the candle which opened at 9 p.m. on the 17th. If we do successfully navigate 32.81, either by price going through it or strongly and not looking back, or breaking above it, retest from the other side, a bit of consolidation before another break with a strong bullish candle to the upside, I'll be targeting, I don't know, even though 33.04 is a level on the chart, if we do have consolidation and a break above and a close above 33.04, we're targeting 33.50, above which we'll be looking at reactions up at 34.29. Over the day, I'll be looking definitely at moves up to the 33.50, not much beyond that within a day's worth of trading. So overall, I do maintain a bearish stance until proven otherwise, in terms of a sizable candle to the upside, indicating that buyers have come into the market and are willing to really challenge the sellers of the pound against the dollar. So before I go, LCS, like, comment, subscribe. Thanks for watching.